One.
Thanks so much for tuning into this earnings conversation with Best Agrolife. They came out with quarter one numbers, which are rather impressive. 31% uptick in revenues. Margins expanded quite significantly, as a result of which over 100% jump in the bottom line. Let's get in Mr. Sanjeev Kharbanda to talk about what can he tell us about the quarters ahead, considering how good a start to the year has it been. Mr. Kharbanda, good having you. Thanks so much for joining in and taking the time out. You would have been a pleased man, but as I also understand, that Q1 and Q2 are usually the stronger months or stronger quarters for you. Put the quarter one performance into perspective for us, please.
Good morning. Good morning, everyone. Thanks for this opportunity talking to you again. Yeah, as you saw, the quarter numbers are really good. So I'm really delighted, glad to, say the growth momentum quarter one picked up is really giving good hope for everyone that the overall financial year will also be good for the company. So if we talk about specific numbers, the revenue grew by 32% year on year. And in fact, if we compare it with the quarter to quarter growth is 141%. And the best part is it is not just the top line. Organization has given due focus to every parameter, and the EBITDA delivery is also good. It's 130 crore EBITDA for the quarter, which is 21% to the revenue, which itself is a remarkable performance by our company against a 14% EBITDA margin till last year, touching 21% for the quarter one is really commendable.
Yeah, most certainly. So what led to this 31% growth? And the question that I asked, that usually the first half is probably the stronger one for you historically. So can the same pattern be expected for the year?
Yeah. So to answer your specific questions, first, what led to this commendable performance? Our product mix, our product portfolio coupled with strong distribution is something which is helping the organization for this kind of growth. As I mentioned last time also, company is investing a very good amount. Company is focused on B2C channel. So once you give due focus to the B2C channel, the best part is you hear the consumer voice. You get to know what exactly the market demands. And accordingly, you offer the product mix. Accordingly, you offer the solutions to the farmers. So in nutshell, the product portfolio coupled with strong distribution helped us in quarter one. Now coming to this second query you had, or rather I would say the curiosity or the apprehension everyone would have. Of course, yes, quarter one, quarter two are good. There are seasonality impact. Every industry, every organization, every line of business has some, lean season, some peak season. So quarter one, quarter two, no doubt, the performance was expected, will be delivered. But let me also assure you through, let me assure the larger audience, larger, community, investor community, and the shareholders through your media. We are confident that even the quarter three and quarter four will also be, a good performance quarter for us. Reason being, there are clearly building blocks identified and worked upon it. As you know, you would have also noticed last year quarter four was a challenging quarter for everyone. We also faced that, issue. But at the back end, we sounded earlier also that at the back end, organization is working to develop some more products, some of the products which are, specific for the crops in quarter three and quarter four. Because every season you have a different crop. So this time we will be coming up with more, research-driven product for quarter three and quarter four. Also, the pipeline is full, so we are quite confident that the performance will be uniform, performance will be consistent, and the annual numbers we will be able to deliver as per our guidance.
Okay,
We are confident.
So are you saying that hitherto, while you've been strong in the Kharif season or the Kharif crops and not as much in the Rabi, you now have a pipeline which will cater to that season as well? And therefore, there is a possibility that you might be able to maintain, not the exact numbers, but maintain the strong growth numbers for
Absolutely.
quarter three, quarter four as well.
Absolutely. There are certain new products which are coming specifically for the Rabi season. which will start, giving the results in quarter 3 and quarter 4, and the trials are already on. In this industry, to launch a product or, to launch a new molecule or a solution, it require a long chain of trials, success, and, testing. So those things were already going on as we speak. So exactly that for Rabi season also, we'll have good offerings. So we'll be able to maintain a reasonably good performance in quarter 3, quarter 4 as well. So that the annual numbers are, what we promised, we'll be able to deliver.
Sorry, what have you promised, Mr. Kharbanda?
In our guidance, we gave a comfort that we will be delivering 30% growth year-on-year basis.
Oh, so you reckon that what you've done in quarter 1, which is 31%, is something circa that number you can maintain
To a large
for the
extent.
next 3-4 quarters?
To a large extent.
To a large extent, exactly. Okay. The other aspect is this expansion in margins. It's been very strong, which has led to the PAT growth too, I reckon. What went behind that? Is it B2C largely? And therefore, what could the new normal be like?
See, of course, it is largely because as an organization, as I said, strategically, we are cutting down the commoditized part of business. It is not that we are not serving that segment. We are serving that segment as well. But our focus is more on B2C channel. Our focus is more on the consumer pack. Our focus is more on unique research-driven products where reasonably the margins are good. Apart from that, it also gives value to the farmer.
Okay, so in which case is this 20%, 21% kind of margins? Is that the new normal, you reckon?
We are quite confident to maintain this, and in a way, in your language, yes, we can say it is going to be the new normal.
Okay, yeah, I mean, this is what I would presume everybody would really love to ask, because it's a significant jump in margins that you've shown, nearly 700 basis points. So that could take some doing. Okay, so
20% is something we have a target internally for ourselves that we should maintain. We should safeguard the 20% EBITDA quarter-on-quarter on annualized average basis. Of course, there can be certain periods, you never know. In this line of business, you have major role played by the season, major role played by the climate condition. So keeping fingers crossed, but the kind of work which is being done at the back end and the building blocks which are clearly identified. So the 20% EBITDA margin protection organization is quite confident upon.
It's interesting that you clocked in the kind of numbers that you've clocked in a quarter which was marred by unseasonal rains. Would you believe that if that was not the case, then your growth numbers would have been even better?
Yes, would have been even better.
Would have been even better. Okay, now a word on the Capex, the new molecules as well that you're launching, because I believe there are a slew of products that you're launching as well. I would love to understand how does this typically impact, because you're launching some products for the Rabi season in quarter 3, quarter 4. Year 1, the offtake would be X, I presume, as markets find comfort with it or your customers find comfort with it, that offtake could pick up as well in the subsequent years. So tell us a bit about it.
See the new product we are launching, and of course, you also touched upon the Capex part, the investment which is going on. Yes, the investment which is going on, 3-way. One is aligning the manufacturing capacity with the market demand. So we are investing on brownfield. We are also clearly focused on the greenfield project for the expansion to cater the market demand. However, specific investment on the research and development and the new product development, which we are talking about, the new molecules which we are offering, and more specific for the Rabi season, which we talked about. There are certain, as the product pipeline is very healthy, and at the same time there are certain low-hanging fruits where which are actually giving us this confidence that the Q3, Q4 also will be good. For example, recently, if you would have noticed, Bestigro became the first Indian agrochemical company which has been granted a permission for a 3-way unique combination of a product, which is combination of trifloxystrobin, difuconazole plus sulfur. this product will be patented product. This product will be launched with a brand called Tricolor. And in fact, the horizon of this product to cater the crops is really big. This is one of the example I quoted. Likewise, when we talk about be it a herbicide segment or fungicide segment in which we are actually investing very heavily, uh, the market size for every product, every molecule is well known to industry. So is the our case. However, in a phased manner, you will see the traction is big. So we have done the trial, we have done the testing. If I, pick up, one simple example, the price, pyroxsulfone, 85%. This product itself, has a market size of 450 to 500 crores. And, in phase one itself, we see the acceptance of our product seems to be really good. So in a phase manner, we are targeting 15-20% market share, over a period of time should be easily doable for us.
What, Mr. Kharbanda,
Yeah.
30% is not a small number to achieve. If I don't remember it exactly, but faintly remember that in the conversation that we had a few months ago, you had spoken about very strong growth prospects for the subsequent years as well, and internal targets. So, one, could you share that with us? Two, are there opportunity sizes which are large enough for you to give you the confidence of maintaining these numbers?
Uh, for sure, 30% growth clocking consistently is not a small number, and that too when the base is becoming large. Last year we did 1,746 crores, and we are saying we will deliver 30% growth over last year, which means we will be crossing 2,000 crore. And it is not just a statement; number speaks more than the statement. So quarter one we proved it, we delivered it. So point is, definitely this consistent delivery, but means consistent delivery is a challenge. However, the potential which has been identified, the area, the gaps which have been identified, help giving us this confidence. Secondly, for I'll take you slightly on a different perspective, but will reach to the point you are asking. Indian market so far, most of the players are focused on insecticide pesticides. If we look at the agrochemical industry per se worldwide it is less than 40% on insecticide pesticide and more on herbicide and fungicide, whereas in India it is just opposite the case, right? Now, in this kind of scenario, if someone, if, Best Agro as an organization is able to identify that there is a high potential way forward in herbicide segment, we have launched some new products in the herbicide segment, right? We think the early bird advantage definitely is available. The scenarios are changing. The, market dynamics are changing. There was a time when manpower availability in the rural area was very very high, so people were not looking for the technological solution for herbicide kind of problem. Situations will change. So I'm bringing a very different perspective for you, because you said, do you see the potential, do you see the gaps are there? Yes, there is a potential, there is a gap in the market, and if we are able to identify that and offer those products, the growth numbers or the targets which we have kept for at least for next couple of years seems to be quite doable. That's one. Second, so far the delivery, the number we are talking about is largely driven by the domestic market. We are hardly doing, it means we are, doing export, but I would say in terms of number, it's negligible, right? So the domestic market itself is so big. The India means it is not just a country, it's a continent. Every different region has a different requirement, different crop. So the point I'm trying to make is that is another potential available, visible to the organization, low hanging, sort of a low hanging fruit, that now we have started investing in the overseas market. We are going in selective markets. Too early to comment, but yes, that is another area definitely going to add some substantial numbers to the existing size of business, existing performance which we are doing. So that also gives us potential. The products which we have, are getting, good recognition in overseas market also. Since we are in a stage of getting them registered, getting them, the trials are being done. So that gives us another very clear hope and clear path to drive on this growth trajectory.
Okay. We wish you all the best for that, Mr. Kharbanda. One final question. Would you need to do any kind of fundraising for the Capex plans or the expansion plans or the product development, or would internal cash flows be enough?
See, fundraising is something when you grow, when the exponential growth is required, and you need to do not just a brownfield, you need to get into the greenfield also. Of course, funds are required. Internal accruals are definitely there when we are delivering good EBITDA margin. So definitely internal accruals are also sizably available for the organization, but still we are quite open for fundraising options, be it through equity route or through debt route. Depends upon the value proposition, depends upon what value the investor brings on the table. Because
would
one
we
thing
open
is
to an equity proposition at the current valuations, and would any fundraising happen in the current year, Mr. Kharbanda?
in current year, no fundraising happened, but yes, even in the current, the share price is giving good indication, and share price is good. But still, if good opportunity or good investor we see for the equity proposition, there is no harm in that. Because see, please understand, it is not just a sort of equity dilution. The point is, if you are getting a good FI, if you are getting a good international investor, it also brings value on the board. It also brings value in sense, it is not just the financial, what you call, financial tie-up. It is also a sort of, the investor of that size, investor of that repo also bring certain good practices, which business require.
Are you in talks with some large good practice foreign institutional investors, Mr. Kharbanda?
We are open. We are, sort of, we'd say,
I'm sorry, you're open. I'm
investor
trying
is
to
welcome.
understand if you're actively pursuing that.
Investors are welcome. We are quite open for having a good proposition. And if only the proposition which brings not just the financial support, also brings some, tangible value on the balance sheet for a long-term purpose, not just a short-term purpose.
Got it. Mr. Kharbanda, lovely talking to you. Thanks for taking the time out. Congratulations on a good start to the year, and all the best for the quarters ahead.
Thank you very much. Thank you. Thank you very much.
And viewers, thanks for tuning in.